let's look at this concept of MBO, management by objectives, in a little more detail. Right. The first step in management by objectives is to create a departmental target. Now, this departmental target must be something which follows from the corporate target, right? If we look at the manufacturing department, right? The manufacturing department, we could say that the department target is to improve the quality of output. Now, this is something which has come from the corporate objective. The corporate objective might well be to enter a new market segment, and the new market segment might have more demanding customers. Hence, quality standards within the company need to necessarily improve. So, from the corporate objective, we come to the departmental objective, right? The departmental target, which is to improve the quality of output. This is step one. Now, step two is we need to create a sub-target. A sub-target which defines this target in a more operational way, in a more actionable way. Right. Quality of output, one way in which it could be made actionable is by saying that let us reduce the percentage of rejects. If that is our target, if the target of the manufacturing department is to reduce the percentage of rejects, right, that would help it to achieve step one. Okay. Now that this has been agreed on by the department, let's move to step three. Step three, we are saying that this sub-target needs to be broken down into individual manager performance measures. The manufacturing department comprises several functional people, right? There are different parts of the manufacturing process. There are different kinds of functions in manufacturing. So each one of these is represented by an individual. So performance measures for these different individuals must all coalesce into step two, which is reducing the percentage of rejects. Now, once this is done, once we have broken down the sub-target into individual manager targets, the last step in MBO is performance review at agreed time periods. We need to review each individual in the department must be aware that his performance will be reviewed at a particular point in time, right? Now, he knows what the target is, he knows what he has to achieve, okay? This needs to be reviewed. So, this is the concept of management by objectives, and this allows the organization to ensure that that hierarchy of objectives we talked about actually operates in practice. Let's see what the gentleman who spoke about strategy implementation earlier, let's see what he has to say about this issue of organizational structure.
The corporate organizational structure is often the first thing that's tinkered with to align the organization for the implementation of strategy. Corporate structures are many and varied, and they're set at the discretion of the CEO and the team he has assembled. If you divvy up the strategy amongst the managers, the CEO will likely adopt one or more elements of the following structures. So first you have entrepreneurial structures where everyone is a generalist and the CEO or the general manager of that business unit makes all the decisions. You may have a functional structure where you have specialized roles that are defined and staffed accordingly. The CEO establishes an executive committee for making all the major decisions. You may then get to a point where you have a divisional structure, where business units themselves have resources and manage their own businesses separately. Decision-making becomes more decentralized. A matrix structure is where you have a functional and a business unit structure combined at the same level in the organization. That is to say that employees have two superiors to report to. A functional manager, so for instance the CFO, as well as a business unit manager, which would be the president of, say, a particular division. This type of structure combines the stability of the functional structure with the flexibility of the business line structure. And it's best used when the external environment is complex and changing. So you'll see this type of structure in, say, the aerospace industry. And finally, we have a network structure. And this is an interesting and emerging structure where most of the activities are outsourced to strategic partners, and that the organizational structure is in many respects a virtual organization. It's best used when the environment is unstable and there's constant change in conditions requiring innovation and a quick response. The structure provides the company with the flexibility to cope with change and the shifting patterns of trade and competition while allowing it to focus on its distinctive competencies. We see this structure evolving more and more in the public sector, in government.